Gold and silver prices whacked by data, not central bank hikes, as a summer complacency hits ETFs. The price of gold and silver raised this week's earlier gains versus a rising dollar on Thursday after the US Fed and the Eurozone ECB both raised their key interest rates to the highest since 2001, citing the strength of inflation, while new US data blew past analyst forecasts for the world's largest economy. Second quarter GDP grew 2.4% on an annualized basis, way ahead of consensus predictions of 1.8% thanks to inflation in domestic US prices slowing hard, dropping over 1 whole point to 3.8% on the core PCE measure. New orders for US durable goods also blew past consensus forecasts for June, up by 6.2% from May when defense goods are excluded. With analysts and traders universally predicting Wednesday's quarter-point rate rise from the Fed, yesterday's non-event extends the summer complacency in precious metals, says a note from Swiss bullion refiners and finance group MKS PAMP. Data remain larger risk events than monetary policy for gold and silver prices. Anemic performance from gold and concerns over the economic outlook, especially in China, have weighed on silver, says Reuters, quoting analyst Rona O'Connell at brokerage StoneX. But for gold, a price of $2,000 remains a viable target once this rate-rising cycle ends amid continuing geopolitical tensions, O'Connell believes. Rising 0.8% after the Fed's decision to touch one-week highs at $1,982 per troy ounce this morning, the dollar gold price then fell $25 within an hour of the GDP and durable goods figures, and the price of silver lost 50 cents, also trading back at last weekend's level around $24.65. The euro gold price fell less steeply, down €10 per ounce from Thursday morning's new 5-week high at €1,784 and bottoming just ahead of the ECB announcement. With the UK Bank of England now widely expected to follow the Fed and ECB with another 0.25-point rate rise of its own at next week's meeting, the UK gold price in pounds per ounce fell £10 to trade back below £1,520. Whatever the short-term social costs of getting inflation under control, said Fed Chairman Jerome Powell after yesterday's rate rise announcement, and repeating his 2.0% target for core PCE, the longer-term social costs of failing to do so are greater. The historical record is very, very clear on that. Inflation continues to decline, but is still expected to remain too high for too long, European Central Bank President Christine Lagarde then said after the 19-nation policy decision Thursday, also repeating that, "We are determined to get inflation down to the ECB's 2.0% target in a timely manner." Further ahead, we think gold ownership and long allocation to gold and silver is something that acts as both a late economic cycle diversifier and something that will perform as we look to the next sort of 12-18 months, says giant U.S. financial services provider J.P. Morgan's Greg Shearer, executive director of Global Commodities Research, claiming that gold and silver look quite agnostic about whether the U.S. Fed has engineered a soft landing or hard landing for the economy. But among gold-backed ETF investment trusts, the giant GLD yesterday reversed its largest one-day inflow for 2 months, shrinking by 0.2% as the Fed raised its key interest rate to a ceiling of 5.50% per annum. Number 2 gold ETF the IAU meantime held unchanged in size at its smallest since early April. Giant silver-backed ETF the SLV was also unchanged in size Wednesday, remaining the smallest since May 2020 with no daily investment inflows since the end of June.